Charge going up, fire in the hole, go. 1. Left clear, servers on the right, main floor clear, moving deeper. Room secure.
Left. Multiple terminals, all live. Drives in, pulling the data now. Package secured, moving out.
In this lesson, we're going to break down the contract specifications for the two main equity futures we trade, the Dow Jones, UIM, and the Nasdaq 100, or NQ. Every futures contract is standardized by the CME group. That means no matter who's trading or where they're located, the tick size, tick value, and margin requirements are the same. When you buy or sell one contract, you're trading that standardized unit of movement in the index. Let's start with YM, the Dow Jones. Each tick on YM equals 1 full point and is worth $5 per contract. If the Dow moves from 38,000 to 38,100, that 100-point move is worth $500 for one contract. YM typically moves a couple hundred points per day, so it offers steady, controlled volatility. Now let's look at NQ, the Nasdaq 100. Its tick size is a quarter of a point, 0.25. Each tick is also worth $5. That means 1 full point equals 4 ticks and $20 of value. If NQ moves 10 points, that's $200 per contract. NQ is faster and more volatile than YM, which is why many day traders gravitate toward it. The key number you must memorize is the tick value. Your risk and reward are always calculated in ticks and dollars. Multiply the number of ticks you're risking by $5 to know exactly how much money is on the line. If you set a 10-point stop on NQ, that's 40 ticks or $200 of risk. Trade 2 contracts and it becomes $400. Simple math that keeps you honest. When you compare the 2 contracts side by side, YM moves slower and smaller, great for learning discipline and timing. NQ moves faster with larger point values, great for momentum and volatility. The important thing is to pick one and study its behavior until you know its rhythm. Remember, futures trading is a numbers game. Understanding contract size and tick value is the foundation of risk management. When you know how much each move is worth, you can control your risk instead of guessing it. In the next lesson, we'll talk about margin and leverage, how a small deposit controls a large position, and how to manage that power responsibly.